Hello, welcome back to another episode of Finance Agents Live. This is episode number 64. I'm Tim MC, and today I have a special guest, Carol Bewley.
Hi.
Welcome to the show, Carol. Today's show is going to be all about Carol. Carol is a relatively new senior loan officer with us. We thought it'd be fun to do an employee spotlight, kind of help you get a little background on her. She'll talk about some deals that she's working on with us right now. She'll talk about her background, talk about what it is to be a loan officer. If you're not a loan officer, you kind of learn what that process is like, and see some of the deals we're doing and get started. So 4 things we're going to cover today is who is Carol Bewley, going in deep, intense. What is a loan officer? We'll talk about her background, the places she's worked and what she's doing now. And then we'll talk about deals, as we like to do, some deals that were in the works. We have 6 different deals we're going to be talking about. If you're new to the show, haven't been here before, please subscribe. If you like how we look, like the show. All right, with that, let's go ahead and jump right into it. Carol, again, thanks for coming on to the show. Why don't you tell everybody, who the heck is Carol Bewley?
Well, I am a loan officer, and I've been doing private money for 15 years. One company for 5 years and the other for 10. And
how many millions of dollars in fundings do you think you've done over the last 15 years? We didn't prep for this, so 18 billion, right?
Right, yeah. Probably about 50 million.
50 million, okay.
Easily, yeah.
What do you think the average loan size that you've done over the years has been?
Usually around 400,000 or 500,000, and then $1 million plus, like the last few. Yeah.
Right. Okay.
Yeah,
all right.
yeah.
$500,000 target. Okay.
Yeah.
So you've been doing this for 15 years. You've been funding deals here at Lendterra. You're direct funding deals with borrowers, and you're also acting as a wholesale rep for all the brokers we work with.
Correct.
Are you getting more direct business or more broker business right now?
Broker business.
Okay. Now, in your first month with us, you issued 22 LOIs.
Right.
22 LOIs in 1 month. How does that compare to what you've been doing in the past? Is that kind of the normal flow?
No, it's actually a lot more than what I used to do. You guys do great advertising and get a lot of people in, that's for sure.
And also we write an LOI for just about anything, right?
Right.
And we're going to be talking about some of the weird stuff that we do today. I really like talking about the weird deals that we're working on. So we'll go into some detail on that. And by the way, if you're watching this and you have questions for Carol, go ahead and type it into the box. Hopefully Darren is paying attention and he'll pipe in at any moment and let us know what's going on. All right, so you are a senior loan officer with us.
Yeah.
Why don't you talk a little bit about what that means? What's it mean to be a loan officer? What's a normal day? Let's start with that.
Okay.
You come in the morning, and before David starts yelling at you, I'm just kidding. Well, what is your day like? What do you do?
I check my emails, check my calls, but I talk to clients, talk to brokers on deals, and when I do have a deal that I need to go talk to David with, I quickly go to him, say, this is the deal we've got, and he says, yay, and we start working on it.
Yeah, like yesterday I heard you tell him that you had a client that was ready to move forward. I believe it's somebody that you'd issued an LOI to in the past.
Right.
They had turned it down originally because they didn't like their rates. They then sort of learned that we could actually offer something that other people don't have. So they came back and gave you the green light, and you went to David, and then I heard him talking about it's on an island,
Yes.
cut the loan rate or something like that.
Yeah, and it's got to be 50% because an island off of Rhode Island.
An island off of Rhode Island.
Right.
Okay. Darren, when you go back to that list, we're using that as a cue for what to talk about. Okay, so let's say first thing in the morning you come in, you're checking your stuff, you're talking to people. What are some of the things you would do during the day besides just read your email or call people? Or is that mostly what you're doing?
That's pretty much what I do. And I email back, the brokers, let them know what we can do, and then get out LOIs. That's the main thing. Go over the deals, get the LOIs out, and hopefully get them signed and get them back.
Okay, so brokers are pitching you scenarios.
Right.
Out of the scenarios that you hear, what are the ones you like? What are the ones you don't like? Are we doing LOIs for most of the scenarios you hear? Or are you kicking out two-thirds of them?
I would be kicking out quite a bit of them because some of them we just don't do. We don't do land and we don't do construction.
Yeah, so, raw land, we get that a lot. Yeah. It's the most volatile type of real estate asset. That's one of the things we just don't touch. Raw land, definitely no. Construction, probably no.
Yeah.
One of the reasons is we're dealing with high-risk borrowers, and when we throw in the risk of construction in there, that's just something that we don't want to deal with.
Right.
What's one of the weirdest ones that you rejected that we just wouldn't do? You got a request about recently. I love throwing these things out.
I know, right? Just in the last second. Well, I did get it's a building, and it looked pretty nice, but it was really rough inside. I mean, it was completely demolished on the inside. So
Is it inner city or?
Yeah, it's inner city,
okay.
and I couldn't lend on it because it's just too much work to be done in that building. So, and if I was going to do it, I'd probably do 25, 30%. That's not going to work for the client.
Right, yeah, so that's our lever. The worse the deal is, the worse the borrower situation, we're just going to tone down the LTV to be something lower. But if we see that, for example, you want to purchase a property and you just don't have enough, or you want to do a refi and the first mortgage, we can't even give you enough to cover the first mortgage, that's when we generally will say no. But we have the other side of that is we had a loan where we were willing to do an amount that was lower than the loan they were trying to refinance. We told them that, and they went to the other lender and were able to negotiate a partial carryback or a partial second, right? So the property, they wanted a $1.3 million loan. They had a $1.2 million payoff. We went back and said the most we'll do is $1 million. So they got their lender to subordinate $200,000 so we could do a $1 million payoff, and we could still proceed. So we don't necessarily say no, we just might come back with a lower amount, and we can help you work through it.
Right.
All right, so you're talking to clients, you're talking to brokers, you're negotiating with underwriting, that's Dave in this circumstance.
Yeah.
You're getting appraisals.
Right.
Making offers.
Right.
What's it like when you make a loan offer to somebody? What's that process?
I send out the LOI to them, let them know what we can do, and hopefully get it back as soon as possible with our loan summary filled out, and we move forward. And then when it happens, it's great.
Okay. And then the single most important thing you do in order to get the loans to fund is make miracles, right?
Right.
This is all the muddy stuff that you have to deal with. It's the problems that make the deal. And this is one of the things I wanted her to talk about a little bit, because this has been my experience. Anytime you have a deal that's just clean and perfect and sailing through, it's always going to hit a hurdle. So honestly, the cleaner it sounds, I start to get nervous because you know something's coming. Right.
And
so what are some of the things that you've had to deal with that have thrown a deal sideways?
Okay, well, I just had one recently that the appraisal that was done for us was done with the comps and the sales on wood and concrete type buildings, and our building was a metal sheet building. So
okay.
That kind of blew everything, because when you see that value coming in at 640 and the only one metal sheet building that they had comped in the appraisal was like 280.
It was half of that, yeah.
And everything else was higher. That kind of blew that deal.
That kind of blew. That kind of blew. Yeah, David is not a big fan of metal buildings. I tell you one thing that I saw. We had somebody who their one building wasn't quite enough to cover the loan amount they want, and they brought in some outside pieces of real estate as collateral, some outside houses. And when we got the appraisals on the houses, the appraisals said they were worth $600,000 to $700,000 a piece. But when we went and looked them up on Zillow, which we sort of cross-checks things sometimes, the Zillow had $180,000 and $200,000. So we had a huge difference between the value of the house and the appraised value. And when we went to the appraiser, we said, what's the deal with these appraisers? Why are you appraising them so high? Is there some sort of misunderstanding? The appraiser said, well, the house is on a piece of land that would be better used as an apartment building. So I did an appraisal as if there was an apartment building there. Oh. We're like, what the hell is that? That's not a lie. I wish I was making this up. So there went that deal. That was kind of weird. All right, so let's talk about some of the places you worked in the past and the kind of deals you did there. How are they the same as what we're doing here or not? What are some of the other places you worked?
Okay, well, I worked at Union Home Loans, and that was a big company in the 60s or 70s and 80s, and they went out of business. And then in the 90s, someone bought the name, and they thought we were the same old Union Home Loan, so that brought in a lot of business.
Okay, that's good.
Yeah, and so I.
So
worked
you
there.
bought the name of a bank of somebody who was, so you could. Okay, that's smart.
Right.
We should do that.
Yeah, right.
I'm gonna buy Bank of America after Bank of America goes under.
Or Krispy Kremes if they go out or whatever.
Right.
So
they are never going anywhere.
I worked there for 5 years. Loved working there. Did similar what I'm doing here. A lot of
California specific or all over the place?
Actually, mostly just California. And hard money, and we lent quite a bit there. Then I went on to Pacific Shore Funding. And that's we did 120. I did 125s. I don't know if anybody knows those.
125s. I heard her talking about this, and I'm like, what the heck's a 125? So what is, or let's say was, because this went the way of the dinosaur. What was a 125?
Well, 125 was the value of the home. Let's say was $100,000, and you can actually lend $125,000 off of good credit. So you were really just lending on the credit. So you could go 125% of what the value of the home was. And they didn't even have to get an appraisal.
And this was during this savings and loan real estate explosion, right? This is when the real estate loans were being funded by the S&Ls. And then when they went bust, maybe partially because of the 125s, so did this type of lending. And it really hasn't come back, right? As far as you know?
Correct.
Okay.
Yeah. Now everything needs an appraisal, which should be for single-family residences. Then the next place I worked at was Surfside Funding. It was a husband and wife team that had a lot of money, had their own warehouse line, kind of like what we do. And they lent only in California, and they did pretty aggressive loans.
Okay, all right. And that would be the most similar to the kind of loans we're doing now, is that right?
Correct.
So average loan size around $500,000, a lot of commercial. Were you doing owner-occupied back then? That was before Dodd-Frank came and screwed up everything.
Yes, we were doing owner-occupied, and yeah, you could charge, whatever, then everything got changed.
Now you can't do a residential mortgage without worrying about going to jail. So
correct.
Thanks for that.
Right, and Surfside is no longer around because the nice folks that I worked for when I was working for them were already in their 80s, and so they passed.
Okay, well,
and
that's too
bad. Yeah.
All right, but it was a good experience, and we appreciate that because that really helps, and that comes to now. So you've been with us about 2 months, I think, about 2 months, and 22 LOIs issued in the first month. So if you're watching this, what you should really hear is we are super aggressive. We're willing to put out an offer on stuff that almost nobody else is. So you've got a deal you're sitting on, you don't know where to put it. Call, put your information in. You might end up talking to Carol and get one of her LOIs.
Yeah.
All right, I got a hand up. Somebody's asking a question?
Yes, they are. So, Best Homes, DFW, don't know who that is, but they're asking, do I need to get a license first before joining your company?
Fortunately, because we're not dealing with Dodd-Frank, owner-occupied, conforming residential, we're not dealing with that. You can work with us without having any specific licensing. There's a lot of different ways you can work with us. Now you're watching the Finance Agents YouTube channel, and Carol's with Lendterra, which is our mortgage lending company. You could work with Finance Agents by just referring deals to us, and then we do everything. You could work as a loan officer with one of our sales offices. We have about 40 or 50 active sales offices right now called member offices throughout the country. Or you could open up your own funding office, your own member office with us. Or you could work directly with Carol as an independent broker. So a lot of different ways you can work together. Whatever you're doing now, let's just find the thing that's the best fit for that, and we can work together. But because we handle all the important stuff internally, there's no requirement for you to have any licensing.
And I have licensing.
Yeah.
I have my TRE and my NMLS.
We got that.
Yeah.
All right.
Awesome. We do have another question. Do you guys work with veterans?
No way. I'm just kidding. Yeah, of course we do.
I'm looking at you going, what?
Yeah, we'll lend to vets. We'll work with
down.
vets. We love veterans. We appreciate everything you've given for it. My family's full of veterans. My dad served in the Air Force. My grandfather in the Navy. So if you're a vet, we appreciate it, and we're happy to work with you. Lend to you or lend to your customers.
Yep.
Okay, so let's get into some deals that we're working on. I put this one first because this is the first loan that you closed with us that we worked on. So we're talking about a Florida convenience store. What can you tell us about this loan?
Well, it just happened to be, it used to be an old gas station, believe it or not. It was converted. And so it's a small little building, it's a big lot, and it's $200,000 loan. It funded within, I think, 14 days. It was really fast. We got the appraisal quickly. It appraised at $390, and
gas stations are tricky. If you don't already know, a lot of lenders hate gas stations. A lot of lenders refuse to lend to them, or other ones are super careful. Even us, we're careful also. One of the reasons is anytime you got gas tanks underground, there's going to be leakage. You're going to have environmental issues, so you're going to have to do environmental checks, and that just makes it harder to get a loan. So we do lend for gas stations. We have a couple that we've done recently. We have one that we're closing right now. We have a group of 5 gas stations where we're trying to do one loan for all 5 that we're working on also. So we can do it. All right, so this was a $200,000 loan based on a $390 appraisal.
Right.
What was the biggest, like I said, every loan has problems. What was the biggest problem or hurdle we had in getting this one funded besides just the gas station?
Insurance, because it's a small little convenience store, or was. It's just tough to get insurance. They only wanted to insure $100,000 of the $200,000 loan amount.
Yeah, what I think I heard is that they were saying the building itself could be rebuilt for $100,000.
Right.
So the insurance company wouldn't give $200,000 insurance, even though our loan was $200,000. Now that is something that almost all lenders would kill.
Right.
If you can't get insurance to cover the entire amount of the loan, then who knows what's going to happen. There's a lot of risk. We were willing to do it, even though we could only insure half the value of the property, partially because the value of the land itself was worth a lot,
right.
and that's what we're collateralizing. But still, a lot of people would have said no to that, dead.
Right.
We funded it. All right, so that was your first loan.
Yep.
Did you ever have anything like that on one of your old loans at any other lender you worked with? You ever remember anything like that?
Yeah, I had issues like that.
Where they were willing to fund it, even though you couldn't insure the whole thing?
Yes, but our loan amount times were so short, kind of like here. I mean, 1 year or less, so you're hoping that that building doesn't burn down or something.
Right, hoping
like
the
that.
land doesn't go
or
away
the value doesn't
in a flood or a
right.
earthquake or something. Okay. All right, so that's the first deal. Let's talk about the second deal here. We have an Ohio commercial strip mall.
Right.
Now, this one is actually, I believe, loan docs have been ordered.
Oh, they've signed already.
They signed. So they signed yesterday.
Yeah.
And we had some last minute stuff to come up. So talk about the loan, what we had to go through to get it to where it is now, and what needs to happen to finalize it.
Okay, well, we had to get the appraisal, and the appraisal came in like at an evaluation of 2.9 to 3.2, depending on some of the things that needed to be done to the improvements being done to the property.
Are you talking about they appraised on an after repair value or?
No, as is was 2.9, and then
Okay.
possibly worth 3.2 with the improvements that they were going to be doing to the property. So we took that 2.9 figure. That's
Okay.
the safe figure, because
Right.
we always only go on the as is. It was in Sandusky, Ohio. It's a really nice area, and it had many liens on the title, and also the payoffs they had to negotiate down. So that took quite a while to negotiate the payments down.
Yeah, when we say many liens, actually the borrower wouldn't even show us the title. It was so bad when we first
Correct.
got it. And then this is one of the things, I think you spent a month or maybe more than a month working on clearing the title issues that he had.
Correct.
Before it even got to us. And once it got to us, there still were 4 different mortgages that had to be resolved. So I wonder what was on there before.
Right.
Frankly, I'd love to know. Fortunately, it doesn't matter because the title company insures against surprises.
Right.
But there was one surprise for the borrower last night when he went to sign.
Yep.
What was that?
The surprise was that the title company we were using went ahead and got all his information from another title company. I didn't know this, full disclosure, and they struck a deal. So what happened was my title company talked to the past title company who actually worked on our borrower's files in the past and picked up a file for our borrower on this property and negotiated a $22,500 referral fee.
That the borrower was supposed to pay, and the borrower had no idea. So when they came to close, the last thing they saw was an extra $22,000 bill that they weren't expecting.
Right.
A lot of people would be pretty mad at that. We probably shouldn't talk too much more about it because that might end up in litigation. So
Right.
let's just say that was a big surprise. But the borrower signed. They went ahead and signed anyway,
Yeah,
right?
they negotiated a fee down, yeah.
Okay, so that should be funded today, meaning the money would go into escrow and could be dispersed today or tomorrow.
Right. And this was a guy that didn't have the best of credit. He's got a lot of property, but not good credit.
Okay. And it looks like we're also doing an improvement reserve. So we're holding $395,000 out of the $1.5 million for him to do the improvements to the building.
Correct.
That you guys were talking about.
Correct.
Okay, great. All right, next let's talk about New Jersey. Anytime you do anything in New Jersey or New York, you got to be real careful. Those are interesting states.
Yeah.
So this is a medical office, I believe an oncology center. This is one you're working on. What's the loan amount? What can you tell us about it?
It's a $258 loan amount. The property's worth $430, so we're right at about 60% loan to value. We're having a title delay, so hopefully we're getting that as quickly as possible because it must close by the 31st.
Yeah, commercial title. Normally, how long does it take to get title? And I thought it was like 2 to 3 days.
That's
typically.
on single-family residences, but usually on commercial it could take a little longer because they have surveys and what have you. So it
a
could be a
week
little longer.
to 2 weeks.
7 to
is
10
not,
days.
7 to 10 days
Yeah.
is normal.
Right.
Okay, and how long have you had this file?
I literally got it. I started talking about it a week ago. Mm-hmm. I got it Friday. Last Friday was when I got all our paperwork, and now they're telling me that we want to go ahead and fund it as quickly as possible.
I need the title. So it's the 24th right now. The 31st is 7 days away, and they want to fund it by the 31st.
Right.
That's going to be tough if we have to wait if we didn't have a title report.
Right, we don't.
What about the appraisal? Do you have an appraisal?
Yes, we have an appraisal that was done for another company. They're putting it in our name.
Okay.
And it was just done last month.
All right, so we're talking 588 credit. They want to close in a week, and it's going to take a week just to get title. That means it's going to be
close.
It's going to be
really close.
By its fingernails. So hopefully we can get this one through.
But you know what? We can get documents in a day with our doc signers. We can do that. I mean, it's usually 2 days, but we can do a rush, and they'll do it.
Okay, awesome. All right, good. So that's deal number 3. What's deal number 4? We're moving on to next would be a Socal single-family residence for a church. This one is got a lot of weird stuff going on, which I love. The weirder the better. Lay the weird on them.
Okay.
What do we got here?
Well, we got a property that was quitclaimed 3 times, multiple times.
And just so you know, to let that really sink in, the owner of the property gave the property to her husband, which she later divorced, and then she gave it to her daughter via quitclaim, and then she gave it to somebody else.
Our borrower.
And then she gave it to a church that is our borrower, right?
Right.
So she gave it to 3 different people. You might think, once she's given it away, how can she give it away again? I don't know. Great question, because when the borrower came to us, who now has the church, the borrower representative of the church who came to us who wanted to get a loan, and we pulled title, we see these other quitclaims.
Right.
So that's a problem, first of all.
Right. So we're getting affidavits.
Hopefully.
Yes.
Let's see if this woman can get her ex-husband to sign that he doesn't own the house that she gave him.
Right.
Good luck on that.
And the daughters too. And then it does have a 170 first on there. So
was this taken out by the church?
Yes.
Okay, so they got the property.
No, the borrower. The
prior owner
yes.
has a loan and then gave it away with the loan on there. Mm-hmm. So they never paid off the loan. Mm-mm. That's really weird. Mm-hmm. So the new owner, I'm going to put owner air quotes, who didn't have the title insured and didn't pay off the loan that is still being paid by the prior owner, now wants to pull more money out of the property.
Correct.
And nobody wants to pay off the first because it's got a low interest rate.
Right,
so we're offering a wrap.
Right.
If you haven't heard us talk about wraps before, they're a little confusing, but we're basically offering a $385,000 loan, but we're only giving $200,000, and we're sort of wrapping the other one. We're giving a loan that encompasses the other one. They'll make payments to us. We will make payments on the first. It sounds weird. It is weird. Awesome.
It works.
What else is interesting about this one?
We actually went off a BPO, so a broker's opinion. So
What's a broker price opinion?
It's basically calling a real estate broker and asking them what they believe the value of the property is.
Is it like a one piece of paper, they just write it out? Can they handwrite it? I mean, how official is a BPO?
It doesn't have to be that official, but yes, I mean, sometimes they do put it on their letterhead and they do all that stuff. I just need to know, hey, what's the value of this property if we take it back? And on this one, it's pretty good value.
All right, so you started the process with a BPO, but
Yeah.
we still ordered an appraisal.
Oh yeah, we still ordered the appraisal because we thought we could actually fund this loan literally in 4 or 5 days until we got the title. That's the reason why we were going to just go off a BPO. It's in Orange County, and that's why we didn't even think, hey, we can fund it without the appraisal. But we knew that we needed an appraisal on it. We ordered it, but we weren't going to wait for it. Once we got the title in and it showed all the issues.
And you found out the house had multiple personalities.
Yeah. Then we're like, uh-oh. And of course, our borrower didn't know that she had quitclaimed it also to other people.
I'm not going to touch that one.
Yeah.
Okay, I don't know how you don't know. But, all right, moving on. So that's a real interesting deal. Next one, and this one's kind of funny because we send out an ad. Uh-oh, just disappeared. The notes. My notes are gone? Okay. This one, we send out an ad letting people know that we like doing big, scary real estate loans. It's sort of a Halloween theme because we've got Halloween coming up next week. And I just think it's kind of interesting that out of that, we got a funeral home loan that we're working on. So tell us about the Virginia funeral home that we're looking at.
All right, well, it's going to be a 50% loan to value. So we're looking at $760 loan amount. He does need some repairs on the property. He's got like mid scores of 600. And he's got like a first and second we're paying off. But we are giving him cash to do the repairs to the property and some cash for business too. So, and he makes money. I mean, his tax returns show really strong, and he's got great P&Ls certified by his accountant.
Now, typically, if you come to us with a funeral home, a church with a steeple, there's a lot of other types of buildings that are called single-purpose buildings. I mean, this one literally has, they do cremations downstairs. I mean, nobody's ever going to use this for anything other than a funeral home.
Right.
Normally, you're going to see the LTV dialed down on that, right? If we're going to make an offer, it's going to be lower because it's much harder to move a property like this because only a funeral mortuary, you can only be a mortuary. Right. So for us to do 50% on this is pretty high. Normally, we don't necessarily look at the cash flow and P&L and all the other stuff she was talking about, but those are some things we were able to use to justify a higher loan.
Right.
So this one's in the works. Let's hope no ghosts come out of the closet and kill this one, because there's a lot of weird stuff here too. This is the first funeral home that I would see us actually do. I've seen some other ones come through, but they haven't happened as far as I know.
I actually did a cemetery once here in Glendale, a $4 million loan. They were dying to get the loan.
Oh, there you go. All right.
You took my line.
Oh, that was it. Darren was teeing up for that one. $4 million. I mean, who's going to buy a cemetery? I don't know the revenue model for a cemetery.
It was pretty big, let me tell you. It was worth a lot of money.
Okay.
Okay, it was good.
That's interesting. All right, so that's deal number 5. I think we got one more that we stuck it on the end because I like talking about the wraps because I see us doing a lot of wraps into the future. There's a North Carolina commercial wrap where we got somebody looking for money for a building with a grocery store in it. What can you tell us about this?
Well, this one needs tenant improvements, and we're waiting for the first mortgager to give us the letter stating that they're going to extend out the lease. I'm sorry, the tenant.
Mortgage and lease.
No, not the mortgage. I'm sorry, the tenant to extend out the lease another 10 years, so that we can make certain that we're gonna do the improvements. They have to have improvements done on the property.
Okay, so what happened is the borrower came to us and he said, I've got a tenant ready to sign a 10-year lease or re-sign because he's just finishing up another 10 years. A big commercial tenant.
Right.
But they won't sign unless I do $250,000 in improvements on my property.
Right.
He can't go to a bank and get that loan because the bank's going to say, we can't give you a loan, you don't have a tenant in there. And the tenant won't re-sign unless he gets the loan. Catch-22 type of situation that commercial lenders kind of screw customers with all the time. I'm sorry, it's just what it is, right? How do you get out of that situation? You don't. You come to somebody like us who's willing to work with you. Now, we only do first position mortgages, so we can't just put a small second mortgage. So instead, we're offering a wrap. So we'll give a 1.8 about a $1.9 million loan where they actually get 300 grand cash out.
Right.
He keeps his first position loan, which is a super low interest rate, 3.9% or something like that.
Right.
He'll pay us, and once he can pay off the 300 grand, maybe he refis the whole thing, which he's able to do once the tenant has re-signed. So this is really, truly bridge financing. We might be there for 3 or 4 months, hopefully for the client. Their payments are going to go up a lot while they're working with us, but then once they pay us off, they'll go back to having that nice low interest loan.
Right.
So it's a borrower with good credit. They just need the repairs, and so it's the kind of deal that we love doing.
Yeah.
All right,
Just real fast, what is a wrap?
What is a wrap? I feel like that's what I was just saying.
For those viewers who don't know what a wrap is.
Okay, so the first stays in place. Okay, so the first mortgage stays in place. We give them our $300,000 loan, and we're putting them together, right? We're doing a $1.9 million loan or $1.8 million loan, whatever that adds up to, right? So what we're doing is we're making the payments to the first. Instead of our borrower making payments to the first, we're going to be making payments to the first.
Let's just make it real simple. Let's say you have a $1 million building and someone has a $250,000 mortgage on it. If we came in and gave a wrap, we would give, the legal term is an all-inclusive trust deed. We would give a new first trust deed mortgage. Technically, it's a second mortgage, whatever. So let's say somebody wanted an extra $250,000. You got a $1 million property, $250,000 on there. We come give an extra $250,000 in cash, but we write a $500,000 loan.
Right.
Now, each month, instead of the borrower paying his first and second mortgage, they only make payments to us at our interest rate. We then each month make the payments to the first lender. The first lender stays there. Once the borrower can pay off our $250,000, we go away and they go back to making their payments on the first mortgage.
Right.
So it's a temporary bridge financing where because our charter for lending won't allow us to do second, third mortgages. We can only do that by doing something like a wrap. Was that a good explanation, Darren? Okay. All right, great. Okay, so that's all the deals we had, and that's all the time we have with Carol. She was super busy today.
Yeah.
I appreciate you taking some time out of closing all those deals to come in here and talk to us.
Right.
Again, if you're new to the show, subscribe. Thanks, everybody, for coming on, and we'll see you next week on Halloween. We will be here in costumes.
Cool.
Dancing for you, dancing for money. Have a great week. Look forward to doing a lot more deals together. Talk to you soon.